Receiving a home insurance non-renewal notice is unsettling. Most homeowners do not know what it means, whether they are required to leave, what it will do to their ability to get coverage elsewhere, or whether anything can be done about it. I've spent nearly a decade working inside the Canadian insurance industry. In this video, I'm going to explain what a non-renewal notice actually is, why insurers issue them, what happens next, and the steps worth taking when one arrives. A non-renewal notice means your insurer has decided not to offer you coverage for the upcoming policy term. It is not the same as a cancellation. A cancellation ends your current policy before its expiry date. A non-renewal means your insurer will allow the current policy to run to its natural end, but will not offer a new term after that. This distinction matters for two reasons. First, a non-renewal gives you time. Depending on your province and policy, insurers are usually required to provide advance notice before the policy expires. That notice period is your window to act. Second, a non-renewal is not a permanent verdict on your insurability. It is one insurer's decision based on their current underwriting appetite that you may not fit their criteria at this time. Why do insurers issue non-renewal notices? The reasons vary, and the insurer is not always required to provide a detailed explanation. Common reasons include a change in the insurer's underwriting appetite for the type of property or risk, property condition concerns identified during an inspection, a claims history that the insurer considers outside their acceptable range, a change in the insurer's market strategy in a particular geographic area, or changes to the property that were not disclosed. Understanding the reason matters because it affects what you do next. A non-renewal driven by a market strategy change is very different from one driven by undisclosed property changes. The first may resolve quickly with a new insurer. The second may require addressing the underlying issue before a new insurer will offer standard coverage. It is also worth knowing that non-renewals can happen to homeowners with clean claims records. A market strategy change, where an insurer decides to exit a particular geographic area, reduce their exposure in a certain property type, or adjust their underwriting appetite for older homes, can result in non-renewals across a segment of policies, regardless of individual claims history. In these situations, the non-renewal is not a reflection of anything the homeowner did. On the other hand, if the non-renewal appears to be related to a specific property concern or claims pattern, it is worth understanding what that concern is before approaching a new insurer. A homeowner who understands the reason behind their non-renewal is in a much better position to answer underwriting questions accurately and to choose an insurer whose appetite matches their risk profile. Some provinces have rules about what information an insurer must provide when issuing a non-renewal. Where a reason is required and provided, read it carefully. Where no reason is given, your broker may be able to help you understand what factors were likely involved based on what the insurer's underwriting criteria are known to include. What happens to your coverage during the notice period? Your existing policy remains in force until its expiry date. You are not uninsured the moment the non-renewal notice arrives. You have time to find replacement coverage before the policy ends. The critical mistake is assuming you have more time than the notice actually provides, or waiting until the last week to start looking. What to do when you receive a non-renewal notice? Step 1. Read the notice carefully and note the expiry date. The expiry date of your current policy is your hard deadline. Every action you take needs to be completed before that date. Some provinces require the insurer to provide the reason for the non-renewal on the notice. If the reason is provided, read it carefully. It tells you what the next insurer will likely see. Step 2. Contact your broker immediately. Your broker's job in this situation is to find you replacement coverage before the policy expires. Ask your broker directly. What is the reason for the non-renewal? How many insurers are you going to approach? What is the timeline for having replacement coverage confirmed? If you do not have a broker, now is the time to get one. A broker who can access a panel of insurers may be especially useful in a non-renewal situation because they can approach multiple markets instead of only one. Step 3. Understand what the non-renewal means for your next application. A non-renewal notice is part of your insurance history. Many insurance applications may ask whether you have received a non-renewal notice in the recent past. Answering accurately is important. Most insurers who ask this question are not automatically declining homeowners who have received non-renewals, but they are factoring it into their assessment. Step 4. Address the reason if it is within your control. If the non-renewal was issued because of a property condition concern, an aging roof, older systems, deferred maintenance, addressing that concern before applying to a new insurer may improve your options. If the non-renewal was issued because of a claims history pattern, understanding what is in your record gives you more accurate information to provide to the next insurer. Step 5. If standard market coverage is not immediately available, ask your broker about specialty or non-standard market options. In some cases, homeowners who cannot immediately access standard market coverage can obtain coverage through a non-standard carrier while they address the underlying issue. Non-standard coverage typically costs more, but it keeps the property insured. The timeline for finding replacement coverage matters more than most homeowners realize. Arriving at the expiry date without confirmed replacement coverage means the property is uninsured, and most mortgage lenders require continuous coverage as a condition of the mortgage. A lapse in coverage, even for a day, can trigger a lender notification requirement and, in some cases, a forced placed insurance arrangement, which typically costs significantly more than a standard policy. This is why acting in the first week after receiving the notice is important. The notice period is not a grace period, it is the window your broker needs to approach the market, gather quotes, and confirm replacement coverage before the current policy expires. Here is the reframe. A non-renewal notice is not the end of the conversation. It is one insurer's decision at one point in time. Many homeowners who receive a non-renewal notice are still able to obtain replacement coverage, sometimes at a standard rate with a different insurer, sometimes at a higher rate while addressing an underlying issue, and sometimes after making a change to the property that resolves the concern. The homeowners who navigate this well are the ones who act quickly, understand the reason behind the notice, and work with a broker who has access to more than one insurer. What to do in the next 5 days if a non-renewal notice arrives? Read the expiry date. Call your broker. Ask for the reason. Ask how many insurers are being approached. Confirm that replacement coverage will be in place before the expiry date. The free homeowner checklist is in the description. It covers the underwriting factors that affect coverage access, including the ones most relevant to a homeowner who has received a non-renewal. If you found this useful, subscribe. I publish regular Canadian insurance breakdowns for homeowners. Everything I cover comes from nearly a decade working inside the Canadian insurance industry. See you next week.